So that brings us now to the panel discussion. I'm going to introduce the panel and then we'll transition into that. There's Raj Makanji, Chief Digital Officer at FirstRand, joined by Kagiso Matibe. He's the Departmental Head of Financial Technology at Financial Sector Conduct Authority. Joining us is Kersha Singh, Departmental Head of Market, Customer and Inclusion Research at the Financial Sector Conduct Authority. Joining us as well is Luanda Jafta, Chief Executive Officer at the People's Fund. It's a lending fintech platform, as well as Marnus van Heerden. He's a co-founder of Pineapple, an insurtech platform, and Megan Brown, Payments Modernization SME at the Banking Association. Thanks everybody for joining. Appreciate you coming and spending time on this panel discussion here. Just want to check that we've got everyone online. We've got Megan, Marnus, Kagiso, Luanda, Raj, and Kershaw. Welcome everybody, and thank you for joining the panel today.
Marina draw out its true.
Thanks, Dino.
So the first theme of today is platforms, trends, and strategic objectives. In our platforms research report, we defined a digital platform as a technology-enabled business model that creates value by facilitating exchange between consumers and producers. This platform-based business model has become one of the primary ways businesses serve their markets in the era of being digital across most sectors. The financial sector has experienced a significant growth shift towards a platform-type business model. Previously, it took a Fortune 500 company an average of 20 years to reach $1 billion valuation. Today's platform-based startups can get there in just 4. So we're clearly seeing platforms dominate. Raj, Marnus, and Luanda, please can you share with the delegates why you believe this business model and approach to serve customers made sense for your business? We'll start off with Raj, then go to Marnus and Luanda. Thanks.
Great. Thanks, Dino, and thanks for having us on the panel, and good afternoon, everyone that's attending this this meeting. So, I think it's a massively exciting phase for financial services companies, and certainly we believe, the platform-based business model provides significant opportunity. But most importantly, I think it's for clients, right? I think what this does is that it actually gives clients choice, and we as incumbents, have to actually adopt and modernize and understand what business models we have to adopt to actually be relevant for our clients. And I think that for us remains the thing that is single-mindedly we focused on, is to being relevant for our clients. Our strategy is to be fintech-led, integrated, client-centric financial services provider, enabled by platforms and contextual data. That's a mouthful, so that's a lot there, but maybe just to pick up on a few themes there. I think one of the benefits of banks is that we already operate digitally at scale. If you look at FirstRand, we have over 8 million active digital users on our platform with over 100 million logins per month. So we have eyeballs, we have trust, because we've had no choice but to create trust in our platforms. And the question then is, how do we use the trust that we have and the eyeballs and the scale of activity on our platform to actually drive these business model changes? And just to pick on a few, not to take away from my colleagues to talk as well. I just want to pick on a few use cases. The point you made around the network effect between consumers, producers, enabled by a platform. That's very much our strategy. If you take our eBucks program, where effectively we bring large retailers in to provide rewards and activity of spend to our retail customers. Engine is an example. When we created the rewards program directly with Engine, they were averaging 25% market share of spend on our retail client base. Today, that number is heading for 40%. So, I mean, we already see ourselves as not a bank, but actually a lifestyle partner. I mean, we, for example, already have the largest virtual garage in the country. We believe we've got over close on 700,000 cars in our virtual garage worth over 10 billion rand. We're not just looking at financing the cars, we're looking at helping them manage their car life cycle from buying, selling, paying for traffic fines, unfortunately, when that happens, renewing your car licensing, being able to access all our business customers that provide services like panel beating, solving for accidents when they happen, etc., working with government to be able to log accident claims on the platform so you don't have to go and stand in a queue at a police station. So certainly we see ourselves as helping, using our platform and the business model that you referred to actually being able to add value to our clients and take the angst out of life. We think banking is a consequence of all these big life decisions rather than, banking for the sake of banking. You don't wake up wanting to buy a car, get a mortgage. You wake up wanting to buy a new home. And how do we add value in all of the processes associated with buying and selling a home? Super apps, as an example, is a very exciting initiative. We, quite advanced in terms of integrating other third parties into our app. We already have a huge amount of travel bookings on our platform, as an example. Arguably, if you look at our Connect Telco offering, we are already we think we're the largest online retailer of digital services when you take our prepaid electricity, airtime, etc. And then just the last point, one of the use cases you referred to was InsurTech. I think it's fair to say that, we are now the largest insurer, digital insurer into our own client base. We have the most debit orders for insurance going off our client base, and that's all been done digitally in terms of how we've originated, how we actually underwrite, and how we actually allow clients to claim. And we're seeing that we're just starting on this journey as we look at providing value to our clients across all of the financial services pillars we operate and add value in their whole management of the various challenges that one faces in your business and in your retail or personal acts. So obviously I can talk a bit more, but I think maybe I'll just leave it there, Dino, and happy to take further questions later on. Thank you.
Thanks, Charles. That's fascinating. I think that you touched on some really, really interesting points there, particularly around your scale and product offerings. We will touch on it a bit later on some benefits as well, but thank you for that from a first round perspective. Very interesting. Monis, over to you.
Yeah, so thanks a lot for having us, Dino, and definitely echo Raj's sentiment that a lot of what we've done is customer-led and customer-driven. So I don't think anyone starts off a business saying we want to build a platform business. I think it starts with chatting to a lot of customers. So when we started out, we followed a process called design thinking, which is a Silicon Valley-based method where you just talk to customers and find out what are their pain points when it comes to a particular industry. And on the insurance side, we identified a lot of pain points and then built all of these small prototypes around the pain points and then eventually try and put them together into what became Pineapple as a business. And quite broadly speaking, the sort of two pillars in terms of pain points that we identified in the insurance industry is firstly trust. So there's been a huge breakdown in the trust relationship between customers and insurers, and there's various factors that lead to that. So being the lack of transparency, there's also a perceived conflict of interest on the customer side where they see the insurance company as benefiting when claims are rejected. And then the final pillar, the final aspect of the trust pillar that we found, which is quite interesting, is the customers completely misunderstood that insurance is actually a community of people that come together to help protect each other. And that led to a great reduction in the perceived value of what insurance gives to society as a whole. So when we did a survey, we asked people, do you feel like your insurance premium helps real other people? Which it does. That's how insurance works. Everyone pays their premium. That premium is used to help unfortunate people. 85% of people said, no, my premium doesn't help other people. And that shows you why that breakdown in trust is so entrenched into the insurance industry, which of course leads to a lot of bad behavior, leads to fraud, and then leads to the insurer having to treat customers in a different way as well. And then the second pillar we identified is access. So customers didn't, especially our target demographic of customers, didn't want to spend an hour on the phone to get a quote or buy a policy. They didn't want to administer their policy online. They didn't necessarily want a bundled product that's got home contents and building and car and everything. They wanted to ensure the assets that were important to them, and they wanted to insure those items quickly. So that's sort of the problem that we are trying to address in the industry, and so far having a great time and enjoying the journey.
Thanks, Marcus. It was fascinating. So to bounce a few of those points back, it sounds like you use design thinking, customer-centric approach, identify problems, and then apply technology to mitigate and address that approach, which is a great way to do it. Instead of forcing the technology onto a business, you went from the bottom-up approach. And it sounds like it's been very beneficial to the customer base as well, and great insight. Thanks for that. Luanda, over to you now, from the People's Fund's perspective, please.
Hi, Dino. Thanks a million for that. So first, the People's Fund being a crowdfunding platform, I mean, if we didn't have a platform, we'd be writing in a book, and I don't have a book big enough to capture all of the people that we need to do. So it was a necessity. And generally, our perspective when we started the People's Fund, offering funding to entrepreneurs using the crowd to build the economy, I think the biggest thing is we're children of Good to Great by Jim Collins. And, you know, technology is the secondary thing. It is not the thing, like Manus was saying. And I think a lot of times what happens in most markets is we get lost in the technology. I think the big buzzword now is 4IR and all of those things. And it's like, those are just expansions of the human capability in a nonlinear way. And in the same way, that's what technology does for us, for the People's Fund. It allows us to reach people who we wouldn't be able to normally reach. It allows us to collaborate and enforce collaboration, like Manus was talking about what actually insurance is. It's the same thing we think about financial institutions. They're just institutions that collect capital and then choose where they disperse them to move the economy forward. And we said, how could we have individuals have a direct stake in that? How could we have individuals feel like they are part of the process of making that happen? So we had no choice. And also we only had 3,000 Rand. So we could only afford a WordPress website to start 4 years ago, right? And then we've grown from there, you know. So it's definitely about using technology as the background thing that exists that enables us to actually deliver the value you want to deliver while you're not worried about how am I going to talk to customers, you know. I think the big thing is how it helps in starting any business of any size now, of any nature actually. Because with the right technology, you could start anything. I mean, I think the People's Fund is living testament to that in many ways. Just considering its growth and all of the impact it's had in society. I mean, we've enabled entrepreneurs to get over 350 million in turnover in that 4 years since inception. All started from people who just said, how do we bring a bunch of people together to actually develop a solution that works for everyone, you know?
Thanks, Luanda. That's fascinating. So from starting off from a WordPress site to getting to over 320 million as a platform facilitating the consumer and the producer, I think it's a substantial success, and it's a really interesting example of that, and thank you for that. And it also speaks about the business model scaling extremely quickly. and also part of our research findings. Really, really interesting. Thank you for that. So payments is often the most common use case in many fintech, super apps, and big tech platforms. Megan, can you share your perspective on why this has been the case?
Thanks, Dino. Yeah, so, ultimately payments are there to facilitate, settlement of a transaction. So a lot of the big tech platforms are premised on bringing communities together to trade and do transactions. So probably the better known ones would be Amazon and Alibaba in China. So, Ali's a good example because they were operating in a very cash-based economy. So they created their own wallets and payments, digital payments rails to facilitate and grow e-commerce on their platform. And there are different variations of that. I think if you look at a lot of the American-based companies, they're typically using the card rails because those are already ubiquitous in their environment. So they're basically creating wallets that are built on top of card rails. But ultimately, these platforms are looking to make transacting on their platforms easy and having payments as a seamless process in the background. At most, one click and you're done. And sort of, I'm thinking back to Kindles, was one of the first ones where you just clicked, and that was quite an innovation at the time. So I think if you look at China, they've built their own rails, and they've almost become the digital payments market in their environment, WeChat and Ali being the main ones there. In the States, I think you're starting to see potentially a migration away from cards, or in addition to cards, where they want to actually own more of their own ecosystem. And probably the best case there would be DM, the second iteration of Libra, where they're looking at using blockchain to create their own kind of total environment of wallets and payments. But I think ultimately it underpins the fact that these big tech companies are sitting in lots of different markets, but typically bringing buyers and sellers together. Even the likes of an Uber or an Airbnb, they're selling holiday homes or rentals or whatever that is, and there's always a payment on the back of that transaction. So there's always going to be a payments piece on those platforms, and typically those platforms kind of want to own their own ecosystems, and that's driving their interest in payments. And I guess maybe just to draw the distinction to payments as it exists in the traditional form, where we've got a lot of payment networks, and arguably the payments, Visa and MasterCard would be great examples of platforms, some of the oldest ones, in terms of hugely scaled global digital platforms. But in our environments, it's all about connecting up different parties on a shared network. So there's a huge differentiation, I think, between payments as we know it, being facilitating payments between different entities, and the payment systems that a big tech would build, which is typically a closed loop system where they control the entire ecosystem. Thanks.
Thanks, Megan. It's really interesting perspective and distinction to make between the two. Thank you for that. So what do you believe this rising trend means from a policy and regulatory standpoint?
Sure, Dino. So firstly, I mean, for us, it's obviously been just interesting from a research perspective when we obviously surveyed the market to see how prominent this approach to serving customers has been, right? So I think the shift, so from a regulatory perspective, one of the key things is obviously noting this shift towards intermediation and orchestration rather than doing everything yourself. So on one hand, it's obviously strategically beneficial for the platforms because they can scale quickly and they don't have to do everything themselves. But then on the other side, it means more parties are involved in the customer chain. And so because more parties are involved in the customer chain, in serving customers, it means then that from a regulatory and policy perspective, we have to think differently around where we place cost accountability, should there be a breakdown in that chain. So I think that's one of the elements that obviously one needs to think about. And then, as you've obviously mentioned in your presentation as well, many of the platform's value propositions are underpinned by the increasing use of data. And naturally, with the increasing use of data, with the greater requirement for data management, so data collection, data processing, and ultimately converting that data into propositions, it then means there's obviously an increased risk for data breaches. So naturally, across that data management value chain, you would need to also start to think about how do you, again, mitigate some of those risks. depending on the stage at which the data is being managed and processed. So that's another element as well that as regulators we absolutely need to think about. POPIA does outline some of the principles that one can look at, but I think also one has to be quite granular and use case specific in making those considerations as well. So I think that's where, as financial regulators, we obviously have to look at the financial activity and the financial use cases, and then tailor regulatory approaches that actually also address that particular set of activities. And then also another thing to note is the increasing variety of data that's being used. So we did a research on non-traditional data, and we saw that that's also becoming quite prominent in the data that's being collected and used to ultimately make decisions around customers and to shape and craft services for them. And so because of this variety in data, on one hand, obviously is great in terms of it leading to a greater, more sophisticated understanding of consumers. But on the other hand, it also means there's a greater risk around data privacy, because obviously now data is being collected from non-traditional sources as well, beyond just traditional ways of engaging a customer. And so with that data privacy risk increasing, we again need to account for that and come up with approaches that mitigates against that data privacy. And also another area where because of the amount of data that's in the system as well, there's also increased, and the partnership models that underlie many of the business models, there's increased data sharing activity. And I mean, obviously now we're going into the open banking, open finance realm. Again, there needs to be standards and a level playing field around how that is done, so that again, we don't have situations where risk is introduced at different points in the chain. So that's also another area that that we certainly as regulators are thinking about. And then also the sophisticated nature of the proposition. So you mentioned in your presentation that they're seemingly simple in the front end, but then obviously in the back end, the processes and algorithms that actually underpin many of these propositions, that can be quite complex and sometimes not even understood by the platform owner themselves. I mean, if the algorithms are black box. So that then places a greater responsibility on many of the platform owners to inform consumers of these processes so that they actually understand the full scope of what they're getting themselves into. So that again is also something that needs to be considered from a policy perspective. So those are just some of the top level things I think, Dino, that we ought to definitely think about as we obviously usher into the platformization era.
Thanks, Becky. So we certainly have our work cut out for us in this changing world and the increasing complexity. Krisha, what do you believe this rising trend means from a customer and inclusion standpoint?
Thanks, Dino, and I'm quite glad to be going last in this because I feel like I could just point to what everybody else has said. Very, very great insights from the panelists so far. But if I could take it back to basics and remind ourselves, you know, what the financial sector traditionally does in a customer's life. It makes it possible for customers to transact with each other, to save where they need to protect themselves against risks, and to borrow to fund various things. I think the rise of digital platforms really is about making these types of activities easier and more convenient for customers and offer great benefits, I think, in that regard. Manus's example of, you know, improving customer understanding of this very complicated thing that is insurance in a traditional sense, and bringing it back to basics, I think, is a great example of the benefits that it can bring. And I think it offers, you know, really new ways of doing things that are still quite traditional. And, you know, you spoke about gamification, you know, so the ability to make use of new channels, new platforms, and new techniques in how people conduct these financial services, I think can bring about great benefits. The last thing I wanted to mention is that I also think it's great from a if we think about inclusion from a small business perspective. Leander, the example of, you know, 3,000 Rand and you start up, you're able to start up a credible, sustainable business. I think the advantages of that can also not be underestimated when it comes to this platform offering as well. There are, of course, a lot of risks as well, but maybe I'll wait for the next set of questions before getting into those. Thanks.
Thanks, Krisha, for that great insight and simplifying it down to the basics. And I think it does help focus the mind as well. But yeah, we won't get into the benefits next and then the risks. So the second theme today is platform benefits. So our platforms research paper identified the efficiencies of platforms in financial services, having the potential to benefit customers in several ways. These benefits include access and inclusion for previously excluded customers, low fees and transaction costs resulting in more affordable products, customer-specific product offerings, and highly scalable businesses to meet changing customer demands. Kagiso, through our engagement with the fintech ecosystem, what have been some of the benefits promised and demonstrated by fintech platforms?
Sure, Dino. So there's been quite an interesting benefits, I mean, across the spectrum, definitely. I mean, I think if you consider whether it's upstarts or whether it's incumbent institutions, established players. So I think one thing that's been very notable from our chats with various players is because of this business model, it's a lot easier to actually set up a service and start serving customers. So Luyanda's story is actually quite notable, and it echoes across many of the fintechs that we actually engaged with. So it's a lot easier now to actually set up a service and start serving consumers. And so that's obviously beneficial because then we start to see a variety of entrepreneurs and we start to then solve a lot more needs that are not necessarily being addressed right now. So I think that's been the interesting thing, how easy it is to set up. And if the business model works, if there's actually product market fit, if the product actually resonates with consumers, that these products can actually scale quite quickly. So again, Luyanda's story is actually quite interesting. So obviously, small and medium enterprises are underfunded. And so because of that, solutions that really take into account that need and come up with a appropriate proposition can actually scale quite quickly given this business model. So again, that's something that we've seen and it's been very interesting. And then the other area or categories around the use of data. So while, and in another report we did, while we feel like the level of sophistication against best in class is still maturing, so to speak, but we're starting to see already very innovative uses of data, and using a variety of data. So for instance, we're seeing fintech starting to take into account digital footprint, psychographic data. And look, I mean, these data sets have been tried before, so it's not like it's new, but the way in which it's being processed and the kinds of products that emanate from this data, we're starting to see a lot more diverse propositions coming out from that. So that's been very interesting as well. And so obviously many of these startups are nascent, so to see them scale will be very interesting as well. And then particularly on the traditional established player side, I think the personalization that is starting to come through from their use of data as well. So that's something that's very encouraging. So obviously as regulators as well, we want to ensure that consumers are actually sold products that actually speak to their needs and not missold products. And so through the use of data, we're starting to see greater levels of personalization and products that truly resonate with consumers as well. And so especially with established players, we're starting to see that coming through, Dino. And then perhaps lastly, also just from a strategic perspective as well, we're obviously still in the infancy, but starting, and I mean, I think Rosh spoke to this quite a bit, starting to see how partnerships actually play out across the sector. I think that is something also, and collaboration between upstarts and established players, opening up with APIs and how they come together to solve for customers' needs and put together propositions. That is also something we're starting to see. So collaboration between upstarts and established players. So there's obviously still work just in terms of how the data is being shared and whether those partnership arrangements actually benefit both parties. It's not there's no asymmetry, so to speak. So there's obviously still work that needs to happen there, but we're starting to see more of that taking place. And so with those, we're quite excited, I think, from a benefits perspective to just see more of that, because ultimately then means that consumers benefit at the end of the day, particularly underbanked consumers whose needs are not fully met.
Thanks, Christopher, for that insight. I think those are great insights and identifies the benefits clearly from alternative funding. There's a huge international need and SA need to various other benefits that these platforms offer. Raj, as an incumbent that made the transition from product-led to segment-led and now to platforms-led business model, what are some of the benefits you expect to deliver for your customers and suppliers or partners?
Great, thanks, Dino. And I mean, building on what Kagiso said, I mean, I think for us it's a business imperative to start with. I mean, I think the slide you first put up about 7 of the top 10 companies by global market cap are these tech fintech companies. The thing that obviously worries us as financial services incumbents is that many of them are talking of entering financial services, right? So by implication, I mean, we don't see ourselves as competitors of just as banks. We're seeing in this platform world that we are competing in horizontal ecosystems with many other platform players, some coming at it from telco, I mean, we see Vodacom coming out with Alipay as a partnership, as just one example, I mean, so Apple working with Goldman Sachs to launch Apple Card. So many examples across the world where, the world is no longer driven by industry boundaries. They're driven by horizontal ecosystems where cross-industry collaborative synergies are unlocked to solve for customer. For us in terms of benefits, we're already seeing maybe just a few data points. I mean, we can already see that clients that are, digitally active on our platforms, they actually take up to 60% more products. I mean, one of our key measures is how many financial services products our customers have with us across transact, lend, invest, insure, and our telco offerings. I mean, a digitally active customer takes up 60% more products. And as a result, I mean, we're seeing 40 to 50% higher client profit and also a lower cost to income ratio for those clients because, it's a lot more efficient when these things happen digitally. So therefore, the business case is clear and we accelerate it, I mean, and I think just to add lastly, what Kagiso was talking about, data and personalization, I mean, that's a massive opportunity and risk for us, right? I mean, the reality is banks by nature, we carry a lot of rich data because, I mean, clients' income come into bank accounts and we see all the activity of how money flows out of it via the cards, debit orders, et cetera, et cetera. So how are we able to leverage that in a trust context without abusing, that trust to actually add contextual offers back to client? For many years, we've had our proactive offers engine running, which we're in the process of modernizing and then just taking live, which is going to operate more like your Netflix or your Spotify recommendation engines, which actually real time, takes context from what you do to order to generate what we think is the, a best next offer for you. So very exciting opportunity to be relevant and, to be in real time being able to help clients, in terms of how we as a trusted financial services provider add value in clients' lives, as it happens in real time. So definitely benefits are real and a very exciting journey for us that we're on. Thank you, Dino.
Thanks, Raj. It was fascinating, and just to echo a bit back of it as well.
Dino, I think you're breaking up a little.
And your point, so thanks for that, Raj. And I think that the point that you made about platforms entering financial services and financial services companies entering platforms and the significant figures that you spoke about the uptake and the efficiencies and the way forward for First Rand sound very exciting. Thank you for that. Marnus and Luanda, as upstart firms, how has the platform business model been beneficial in enabling you to serve your customers and rapidly scale your products? We'll start off with Marnus and then we'll go to Luanda. Thanks.
Sorry, I was just on mute there. So thanks, Dino. I think easily a topic that I'm sure myself and Luyanda are both extremely passionate about, and I think we can talk about this for days on end if we were given the opportunity. But I think for the sake of this conversation, I'm just going to focus on one aspect, which is just the customer experience and sort of the anecdotal evidence that the customer experience becomes more important and the customer becomes more central to what financial services providers focus on when there is a digital experience. So we did an exercise a while back where we compared the online customer ratings for all insurance providers across the industry, and the top two performers in that analysis was two insurtech players. So unfortunately, not going to name any names, but I think, and the gap between the insurtech players and the incumbents was quite significant in that survey that we did. So it's not as if it's a marginal benefit in terms of customer experience. I think it's a significant one. And I think one of the key drivers to that is because your insurtechs are making access or products so accessible, it also means the inverse, like your customers can very easily leave if they're not happy with this getting. And that is potentially something that wasn't at their disposal in the past. But I think with ease of access going up, ease of customers cancelling and leaving for another service provider that's going to give them something better is going to force everyone to, you can't just compete on one of the pillars being price or service or benefits or anything. You are going to have to compete and be one of the top performers when it comes to all of those pillars, or your customers will simply just go somewhere else. So I think it's a very exciting time for customers when it comes to financial services.
Thanks for that, Marnus. That was great insight as well. So just as its benefits as well for the customer and for the platform at the same time, if the platform isn't delivering on that promise, switching over, it's also just as easy as joining the platform to an alternative. Really, really interesting. Thanks. Luanda, over to you.
Yeah, just quick echo of what Marnus is saying around that. I mean, when we started doing purchase order funding and started marketing on Google, there was nobody else marketing anything related to purchase order funding. Then our account manager showed us something interesting towards the beginning of lockdown, saying that you guys unwittingly have started a trend because you've shown that digitally you could get this thing to work. We're seeing the big players like Marnus, I'm not going to mention them. Now they've jumped into the market as well. So outside of the offering we were giving, the nice thing is now people had access to something that just basically did not exist. We do purchase order funding, especially for things like government, corporate and government contracts. And just generally the financial institutions have given the side eye to those contracts, you know, which is quite interesting because that's one of the best payers in the country in our findings. And one of the benefits we've given is that we've made the market matter. Because of using a platform where we're using very little resources to demonstrate a real market. And I'm not in no way saying we're the only player, there are quite a few players, but it was quite interesting to see how the market sort of shifted and said, look, there's something here, there's something to be done, and how it moved. And the competition is really good for the consumer. But the thing I really want to talk about the real benefit of a platform for us specifically, outside of the benefit for the consumer, is that running a platform business taught us that we're still running a business. And we often forget that when we're running platform businesses. And we get caught out by all the things that matter. So the nice thing is that platforms give you real-time data to fix things. So that's one of the main important things, because when you often forget that you're running a business, Manus was talking about customer satisfaction. Scaling quickly also decreases customer satisfaction quite significantly. And managing that has not been easy. It has been very, very hard. So it's interesting. I used to joke. Raj was talking about their side and coming from a big base, and I go, yeah, the banks don't get it, right? Then I ran a business that scaled, and I was like, oh, now I get it. Now I get how much this hurts, and how platform is not the only thing. You need to support that structure with something that works, that functionally works from an infrastructure perspective, even outside of the platform. So the benefit is speed of learning. I would first say that, and secondly is speed of getting something to the market that could benefit the consumer because of the buzz it sort of creates.
Thanks for that, Linda. So it sounds like cash was left on the table for platforms to tap into quickly with the business model from a platform's lens. At the same time, on the consumer lens, it's clear that there's alternative form of funding, which is a huge problem locally and internationally. And thank you for those insights. That were great. Megan, what are some of the customer benefits you have observed or believe will occur from a transition to a platform-based business model, particularly across payments use cases?
Thanks, Dino. So I guess two observations. One is the types of innovation we may be thinking about here is premised not just on the platform business model, even platform architectures, but other things that are equally enabling of it. And I guess that's sort of the mobile devices that people have in their hands, as that kind of creates the connectivity between the two user groups across the platform. And I think if you look at that, particularly if you're looking at the types of things you want to solve for in South Africa, so I like that analogy of the cash on the table and the ability of firms to quickly step in and solve for kind of these solutions where there are gaps in the market is very powerful. But you know, especially when we look at payments from the space I come from, the mobile device, when it's got the likes of a camera that you can, like in Pineapple's case, you can photograph your device and get it insured quickly, or your ability to transmit a geolocation so that the platform can say, well, you know, where were you at the time you're claiming for your accident or whatever. Those are hugely empowering components of these platform kind of use cases. And I think just to be cognizant that many of the people we're trying to solve for who are underserved in our economy don't necessarily have the devices with those features. So, you know, we have to think about then, to the extent that we think about consumer benefits, how can platforms solve, but on probably a much more simpler device that doesn't have those technologies. And so those will be some of the things we're thinking about in the payments context, to saying, yes, platform works, but does it work for everybody? Or how can we extend the reach of these platform business models to try and make it work? Because we're really talking about digital platforms here. And not everyone is digital and even has those data points that we can use and turn into solutions that create a more personalized service. So I think that, you know, those are the things we have to think about, because we've got this dual economy, and you know, there are learnings to be had around the world, but it's not a one size fits all in that space. I think the other thing is sort of to differentiate the platform business model that says I'm a business that brings different user groups together to connect, but looking at platform technologies. And I think what we're going to be seeing in our environment and banking and payments in particular is saying platform technologies allow us to create these shared capabilities to load scale onto technologies. So in our space, you know, we've got more than 15 different payment streams we're managing in South Africa. We're probably going to be seeing some consolidation, and already, you know, the investments we're making into our modernized payment systems are creating platforms for where we've had a plethora of different payment systems for different use cases. We're sticking them on a single platform and making them customizable. That will ultimately reduce the cost of transacting for the users, the end users of those payment systems. And when I talked about the fact that our payment systems are these interoperable networks compared to closed loop, we will have to create these efficiencies to keep South Africa's payment systems competitive as compared to the global players who are going to want to come in and play in our environment. So I think platform technologies and those modern aspects of it will be important to keep our payment systems relevant, but also to keep them cost effective for the economy and you know, the users of our payment system. So I think those are some of the elements that will play out very directly for consumers over time, we hope. Thanks.
Great, thanks for that, Megan. Really fascinating insights. No one-size-fits-all silver bullet. Payment is developing and changing rapidly. It's the first financial need for anybody is to make payments, and where a lot of the interest is going. Thanks for that. Kusha, have digital platforms increased digital financial inclusion and access?
Thanks, Dino, and I feel a little bit like you and Megan. Megan stole my thunder on this answer a bit. So I think it's how we think about financial inclusion generally is across 3 dimensions. The one being the more traditional access to products and services. And I think there are definitely some questions that can be asked about whether digital platforms really can drive access because of issues like access to smartphones, because of issues like access to data, you know, how ubiquitous is Wi-Fi connectivity or other forms of connectivity to access these services in the first place. And I think it's, you know, maybe a bit of a redundant point to say that participating in platforms often means that you have to be financially served in the first place. You have to have some sort of payment mechanism that you're able to participate through a credit card, a bank account, mobile wallet, or some sort of financial product in the first place. So I think that, you know, there may be some some issues that are not necessarily financial related, but more digital related that could impede inclusion. But the other 2 dimensions of financial inclusion are the usage of products and services and the quality of products and services. So I think we're thinking about inclusion a lot more holistically, not just in terms of putting a product or service in someone's hands, but also making sure that that is something that adds benefit to the consumer's life at the end of the day. They're able to use it, they get good quality from the product and service that they're using. And I think that there are definite benefits in the platform model for improving those 2 dimensions. I really like the way Luyanda put it about making the market matter. And I think definitely when it comes to usage and the quality of goods and services, the ability to provide a service that is so integrated into a consumer's life, that is so relevant to their individual needs and circumstances, certainly has the potential for great benefits on the inclusion side of things. Thanks.
Great, thanks for that, Krisha. Really, really interesting. Holistic approach, not just the actual financial product as well. It's everything around that. It's a really interesting and customer-centric approach. Very, very interesting. Thanks for that. So the next thing that I'm going to unpack is platform risks. So we spoke about the benefits, but with benefits come risks. It's not a utopia that we live in. And in the report, we identified a few obvious risks. So first, such platforms can raise barriers to entry, limit switching, bundling of products, cross-subsidizing products, pushing out competition, driving out competition there, operating on large quantities of data that we've spoken about frequently today. They can lead to data breaches, abuse, and privacy risks. Additionally, customers might not be fully aware of what they get themselves into, particularly on a digital platform. Kusha, what are some of the risks you're concerned about from a customer and inclusion perspective?
Thanks, Kahiso. It's very funny that we're talking about risks, and you know, I'm reflecting on the inclusion considerations. A lot of us have just been affected by load shedding that's making it a little bit difficult to participate in an online workshop. I think that just goes to show, you know, some of the challenges still with the digital platforms in South Africa. I think, you know, you've covered a lot of the risks. There are 2 that I would like to highlight that I kind of grapple with. The one is the balance between reaching economies of scale to make these platforms kind of viable, both from a customer and a business perspective, but balancing that against competition considerations and issues. So I'm sure people would have seen recently, for example, that the Competition Commission is looking into platforms such as Takealot and Uber in South Africa to see if they are maybe putting in any obstacles to competition practices and the way people are able to come to market and the products that customers are being offered. And the second one, I think, is something that Raj alluded to earlier in the conversation. The fact that from a financial services perspective, there's likely to be an increasing blurring of the line. So, you know, Raj spoke about, you're not thinking about a mortgage, you're thinking about buying a house. And now you have a platform that could help you buy a house, insure the house, get funding for buying products, appliances in your house. I think that's great from a convenience perspective, but it also starts introducing risk where you're not too sure where the financial service starts and ends, where another service starts and ends, and then who do you go to as a customer if something should go wrong. So I just like to highlight those two, but I think, Dino, you've covered quite a lot of them in your presentation already, from data considerations and so on and so forth as well. Thanks.
Great. Thanks for that, Precious. Also, again, great insights. Convenience is great until things go wrong, and we do complain when it's such a blended offering. Kagiso, what are some of the risks you're concerned about from a policy and reg perspective? I know that we're all experiencing load shedding around the country. Kagiso, are you online?
Yeah, I'm online. Can you hear me? Dino, yeah. All right, great, thanks. So, Dino, from a risks perspective, I mean, I think a lot of the risks anchor around how customers are treated at the end of the day, right? So I think on one hand, we obviously noted the benefits that emanate, you know, things like customer experience. We noted things like increased personalizations and just better propositions for customers. But then at the same time, some of the issues that we also note is around how customers potentially are locked in or unduly influenced by platforms owing to the data, the gamifications, the algorithms, and the various nudges that are then used, which steer customers towards behaviors that may even enter an involuntary realm. So that's some of the platform behaviors that we are noting as well, that there's a risk that then the customer is not as autonomous or as free in choosing how they engage with platforms. So that's obviously a risk that stems from increased granularity of data on customers. And then also just some of the algorithms that shape or frame decisions and outcomes for consumers. The extent to which firstly, the platform providers understand those algorithms, and then secondly, the extent to which those algorithms are ethical in how they ultimately interface with customers, such that they're not being discriminated unfairly. So, I mean, we obviously recognize that there are things such as fair discrimination, but then there's also outcomes that can be very unfair. So when that's combined with the platform owner not understanding their own algorithms and the outcomes that, the potential outcomes for customers at the end of the chain, that's something that's obviously of a huge concern to us. And all of this is stemming from data. So I think that's one of the things. I think also you mentioned around anti-competitive practices. Again, just the ability for customers to opt out of services. So again, that's something that obviously, you know, we note and watch quite clearly. And then another one is just around misleading nature of products. So it may be simple to understand, but these products evolve, you know, as you interact with them. So do customers understand the full extent of that evolution? And are they being informed adequately around this? And then lastly, just around customer education. So the customer education being fit for purpose. So do you take into account the digital literacy of the customers you're serving? And is your consumer education done in a way that it takes into account the complexity of the product and how it evolves over time, but also the consumer that you're looking to address? So many of the products we're seeing, for instance, they say they're going to address financial inclusion, underserved customers, but then does the education required for the customer to meaningfully consent and participate in that product doesn't match the consumer base you're looking to serve? So those are some of the considerations, obviously, that we are noting, and we certainly want to address. I'll leave it there, Dino. Thank you.
I think Dino is frozen again. Between the cold and the load shedding.
I think it's
Dino,
the
are you
load.
there? Yeah, for sure.
We can take over.
All right, guys. So look, I think in just while Dino's sorting out his connectivity issues. All right, he's back.
Apologies, everybody. Thanks, Zaki. So I think.
All right, so guys, in the meantime, maybe if we could pass the question over to Megan, Raj, Leander, and Manus, just around understanding from their perspective some of the risks they're seeing in their businesses and how they're looking to mitigate the risks. So obviously we pointed to some of these risks. So if we could start with Megan, just around some of the risks you're observing and what are the practices you're using to mitigate these risks?
Thanks, Kiki. So I'll answer more from an industry perspective than a specific business perspective, but I think there's a couple of things I observe, and I think my focus would be on sort of the stability and reliability of the service. So in the payments context, if you're standing at Pick and Pay and your card doesn't work, it's incredibly inconvenient, and there are 100 examples of that. And I think with platforms, and Kagiso, you mentioned that these businesses can scale up very fast, but they can also collapse equally fast if you get that model wrong between how you kind of curate your platform and keep both sides of your market satisfied. So I think that's going to present a challenge for the market, but also for regulators in terms of understanding at what point a system becomes systemic. And because it scales up so fast and retaining that level of service, I observed, we switched off checks when they'd already become 1/100th the size of the e-wallet market in South Africa. And that speaks to the fact that, financial systems, we're quite conservative about withdrawing products from the market because we don't want to leave anyone underserved. Now, if a platform were to come in and became very, significant in your market and failed for some reason, then people could be left high and dry. And I think those are some of the things we need to. So it's different to, I guess, a thing about having a different, an ethical issue or a disconnect between what the firm is offering clients and what's in the best interest of clients. It's really about the stability of the service that you can offer. And I think so that's something we think a lot about in the payments context, which I think these platform business models will change our landscape and create different kinds of risks just because of the pace of change that we can see both in terms of growth and withdrawal of these service providers from the market. Thanks.
Thanks for that, Megan. Again, really great insights and appreciate the comments. I see we have 1 minute left, and I'm going to hand over to Raj for his thoughts on the main risks and how they're mitigated, and then we'll end off today. Thanks very much. Over to you, Raj.
Thanks, Dino. Apologies, Leander. Maybe just quickly, I suppose the reality is this is all about trust. So, how we as platform providers, make sure that trust when we have data, become, to ensure that we, honor the clients. I think the Papaya framework is great. I just want to make a comment on financial inclusion, if you don't mind. I mean, because I do think we don't see a platform as an app. I mean, we see a platform as having multiple interface points. You know, one of our most successful interface points into our platform is our cell phone banking USSD dial string platform, where we already have over 7 million active mobile money wallets, which money flows about 30 billion a year through that. We just launched our Stockfile offering, which is a platform-based ability to enable money being saved in communities where traditionally it's been very paper-based and fraught with all sorts of challenges. Just in terms of my last point, if I can use the opportunity, I mean, I think our challenge as an incumbent is regulatory arbitrage is what we worry about. There's a lot of talk about open banking, but the reality is banks carry massive regulatory requirement and cost of regulation, both locally and globally, to participate in the global financial systems, so we worry about the talk about open banking as opposed to about open data, because arguably if telcos and retailers and other players, fintechs, want to participate in the banking value chains, either they should be subjected to the same regulatory frameworks, or, data should be able to be shared across industry boundaries. And I mean, we could, as banks, also make lots of contextual related decisions based on telco or retailer or Facebook data. So I do worry about regulatory arbitrage as these platform models, and fintech business models continue to mature. That's something that we have to all debate, especially as these industry verticals start to fade to horizontal ecosystems. Thank you.
Very good insight around the risks. Cool. Then we'll end off today. So Luanda, over to you, and then we'll go to Manus. Thanks.
Sorry, I was muted. So when I think of risk, the risk I think about, it's going to be slightly different from what everyone's touched on, because I agree with Megan and Kershia around the risk of thinking a platform will solve everything when we are a two-economy country. The risk I see slightly different, and it relates a little to regulation, is that humans are, let's call it laterally creative, but functionally linear. And platforms are functionally exponential. And I think the biggest risk is thinking that we could regulate them. I know it sounds weird, but I think the risk is our own hubris as mankind in our creativity. Thinking that we could match up to the machines. And the fear I have is as they become more and more functionally exponential, and then they start moving sideways and they start becoming functionally creative as well. Where that's the fundamental risk for me. And take somebody who probably falls on the spectrum similar to a spectrum I probably fall on from a mathematical background, with Asperger's, who's chasing efficiency over the human ethic. That's actually the most fundamental risk, I think, not just to the platform, but to mankind in general. And that's what sort of keeps me up at night. How do we mitigate that risk, that the machines are actually way more powerful than we could ever imagine?
Thanks for that, Luanda, for the Terminator super intelligence angle, and I think it's always a fascinating one. Manus, final words from you, and then we'll end off today. Thank you very much. Manus, are you online, or are you battling with load shedding? Okay.
Load shedding has unfortunately forced them to drop off, so I think we may need to wrap up here, Dino.
Okay, great. So we're at the end of the time today, and a big thank you to all the panelists that made the time to come out today, share their thoughts, valuable insights. It will go a long way with the regulators and the thinking, as well as the sector as a whole. Appreciate everyone for dialing in, and thank you very much, everyone, and keep safe.
Thanks all.
Bye.
Bye-bye.
Thank you, everyone. Bye.
Have a good day. Cheers.
Ciao.
Cheers.
Bye.